Thank you for joining us. This is the Traders Exclusive Live Trader Showcase. I'm Sherry. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. So before we get started, I will share the quick disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time, and past performance is not necessarily indicative of future results. Many thanks to our sponsors for the June Live Trader Showcase, Market Taker Mentoring, TechniTrader, and Money Mentor. Please go check them out at markettaker.com, technitrader.com, and moneymentor.com. Thank you again. We have Jeff Tompkins. He wants to let us know about how to forecast market direction up to 3 days in advance. That would be valuable in any scenario, I would think.
All righty, it's great to be here. Thanks, Sherry. Welcome to all of you. Great to have each of you here. We're going to be talking about how to forecast market direction up to 3 days in advance. I'm going to be sharing one of my top strategies for doing this, as well as a indicator that can help us identify and forecast future directional trends. So before I do that, I'll read you a quick disclaimer. Of course, trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options and must meet suitability requirements. We're going to be going over some various results on our session today, mainly to reinforce what I'll be teaching. So I like to use when possible, real money results, real world results for my own, even from my own personal trading account. So I'll be doing that periodically, but just know that anything I share does not guarantee or indicate future performance. So while some of these figures might be based on actual trades or even hypothetical results, due to the time critical nature of trading, activity of other traders, brokerage fees, etc., we don't guarantee that anyone will mirror the performance that I share on the session today. All right, so let's get started. These are probably some familiar faces to most of you, right? Carl Icahn, Warren Buffett, George Soros, Mark Cuban. They all have probably a number of things in common. They're all, of course, famous traders and investors. But one thing that they have in common that you might not think of or realize is they all tend to take a contrarian approach to markets. So they tend to, if you will, do the opposite of what the broader retail crowd does. So they have this contrarian approach. So yeah, they've all bought high and sold low. They've all made mistakes, right? Because they're human. So we all do that. But predominantly, they use this contrarian approach to overcome that. And this is where the psychology of markets comes into play. So when we look at why markets are so difficult to trade, a lot of it, I mean, there's a host of reasons, right? But a lot of it can be boiled down to psychology. So this is a really interesting psychological curve as it relates to financial markets. And so I'll kind of walk you through this, and then we're going to discuss ways to overcome the psychological drawbacks in trading and investing using a contrarian approach. And I'll give you a specific strategy and indicator to do that. So typically when we get into a trade or an investment, right, we start out obviously with some degree of optimism, enthusiasm, maybe even exuberance and euphoria. Otherwise, we wouldn't get into the trade to begin with. Now, typically when we are experiencing these psychological emotions, there tends to be a high level of financial risk. So when there's a high level of financial risk, this tends to be where we become greedy and we buy. Now, for any of you who've traded for any period of time, have very likely experienced this emotion that can occasionally turn into anxiety, denial, fear, and despair. And this is where in financial markets you'll see panic selling. Okay, you'll see market crashes, bear markets, etc. Interestingly, this can create a lot of opportunity. And when other traders are panic selling, it can often create opportunities that are the best time for trading and investing. So when others are fearful, it may actually be the best time to get into a bullish trade. Now that can then transition to dismay, or from dismay to hope, relief, and optimism. And as you see, it says repeat until broke, right? So we tend to kind of go through this roller coaster of emotions, and it cycles. So when we look at the psychology of failure, anytime we enter a directional trade, our goal is to buy low and sell high. But unfortunately, that goes against our human instincts. Instead, when a security is going down, we sell it. And this is what I was referring to as panic selling. And when it's already gone up, we buy it. Okay. And that ties into FOMO, or fear of missing out, because we panic when the price is falling. Obviously, we don't want to lose money. And then we buy when it's rising because we don't want to miss out on the trend. To compound this problem, we're wired to repeatedly make this same mistake. So we buy high and sell low because that's what our emotions tell us to do. And without a solid trading plan, we're vulnerable to our emotions. In addition to that, if we lack a strategy that can identify momentum shifts, which in other words means you don't know when to get in or buy low and get out and sell high, this can pose a major problem for inexperienced traders and investors, and even experienced traders and investors. This can pose a major problem. So what we're going to do in our session today is turn the tables, all right? So instead of being greedy when there's a high level of financial risk, where we might look at buying into an asset, or fearful when it might actually be the best time to trade and invest, we're going to flip this around. And the system that I'm going to reveal, that I call the slingshot setup, is going to dictate that we are fearful, and maybe that's not the right word, but when there's a high level of financial risk, we are going to be prepared for a market sell-off, okay? So we can protect or hedge open long positions, or even speculate on downward rotation in markets. And then when other people are panic selling and losing money, we can then become greedy. Or maybe a better way to put that again is, it's the best time to invest. If we're gonna buy an asset, we wanna do so from a contrarian perspective, when other people are panic selling. This is that old Warren Buffett adage, be fearful when others are greedy. Okay, and this I think contributes to a lot of the success of the famous traders and investors that we just looked at. So what I'm going to give you guys today to make this easier, we're going to talk about the slingshot. You'll discover what that is, and not only that, and this is where it gets really exciting. This setup has worked 100% of the time on the major indices. So if you go all the way back to the dawn of the stock market and you apply this strategy that I'm going to reveal to you momentarily, 100% of the time it has worked out, okay, in every possible market scenario. I'll show you how to identify it, how to trade it, how to profit from it, how to get in near the bottom and out near the top. And this is one of the beautiful things about the slingshot setup, is it by no means is going to tell us exactly where the bottom or the top of a market is, but it's going to give us very reliable, accurate price zones that can help us identify that. We'll look at how to apply this setup to any market in any time frame. So everything I cover today can be applied to any asset class, any type of asset. So whether it's a stock, an ETF, a forex pair, a futures contract, whether it's on a 1 minute chart, an hourly chart, or a daily chart, or more, or beyond, right? So it's completely fractal. It doesn't matter what the market or the time frame is. In fact, in order for this to work out, markets have to behave this way. So I'm also going to reveal, as part of this strategy, how to eliminate a majority of your losing trades. This is a very simple order entry technique that is, I think, widely underutilized, and can actually help us stay out of most of the trades that aren't going to end up working out. So I'll shed some light on that as well. We'll look at some trade examples together, and then stick with me to the end, and I'll show you guys how you can copy my success and get my trade signals that I use to make a living in the markets. So let's start out by imagining if you could buy low and sell high without any guesswork. Well, there's one volatility study that has actually made this possible since the beginning of the markets. And it's a unique setup that I call the slingshot. And it's allowed traders to buy low and sell high with 100% accuracy when we apply this to the major indices like the S&P, the SPX, the NASDAQ, the ETF that tracks the NASDAQ 100, the QQQ, or the IWM, the Russell 2000. But not only that, it warns us of potential market sell-offs. This alone is worth its weight in gold. If you have a retirement portfolio or maybe a personal brokerage account where you're holding long positions, there's always that fear in the back of your mind that of a black swan event or a major market crash, or a transition from, like we saw back from 2021 to 22, a decade-long secular bull market that then quickly transitions into a bear market. All of these scenarios create fear in traders when they don't know how to navigate them. So knowing when markets are likely to sell off. And again, going back to that psychology chart we just looked at, that would be when other traders are being greedy, they're buying into markets, and there's a high level of financial risk. Okay, so this is very valuable information. Now, once these volatility bands can't be stretched any further, they have to bounce back. So the whole slingshot strategy is built around this inevitability. Markets have to behave this way in order for there to be price action. Now, this rubber band effect actually makes it possible to accurately identify tops and bottoms in markets. Okay, so again, it doesn't matter if it's a single stock, an index like the S&P, the NASDAQ, a futures contract, a forex pair, you name it. But let's start out by looking at a chart. This is a daily chart of the S&P 500 index back from early 2020 during the Corona crash. Now, I'm going to point out a couple things here, and then we're going to come back to this chart and apply the slingshot setup to it. But first, I just want to, clarify a few things and make sure that everybody sees this. In February of 2020, okay, again, we've been in this decade-long secular bull market. S&Ps are hitting new all-time highs. Okay, so if we overlay that psychology curve to this, what is happening at this period of time in the blue circle you see on the chart? There's a high level of financial risk. So just forget about all the, any geopolitical factors or, the COVID pandemic. We're just looking at the levels in the market. There's a high level of financial risk. Markets are hitting new all-time highs. Okay, this is when most other traders are buying in the markets because they have FOMO or fear of missing out. Now, as a contrarian, this is where you'd actually want to look at either protecting, whether that be through a hedge or a stop loss or some other method, any open long positions, or speculating on a downside rotation in markets. Okay, so that's the contrarian approach. Now, obviously, in later February and March, we saw a very significant broad market crash due to the COVID pandemic. Okay, now that actually created buying opportunity. Okay, so think about in the midst of that crash, all the panic selling that's taking place. Traders they're likely experiencing losses if they have long positions on. However, that ultimately creates buying opportunity. And as we can obviously see in hindsight here, around the third week of March, markets bottomed out. S&Ps had traded down over 30% in just a matter of a few weeks, and ultimately drove price back up right to that level where the initial volatility expansion or sell-off ensued. Okay, and again, this is the level where most other traders are going to be buying, but this is where we would actually look at selling. Okay, so we're going to come back to this chart as I mentioned, and we'll apply the slingshot because this is what the slingshot is. It's the essence of the slingshot setup. Before we do that, I'll give you a quick background on myself. So again, I'm Jeff Tompkins. Great to have all of you here today. I have over 24 years of experience trading the stock, options, and futures markets. Received my professional training as an intern at the trade desk at Morgan Stanley back in the early 2000s. About 9 years ago, founded Altos Trading, where I'm the chief investment strategist. We have over 60,000 members in over 100 countries across the globe. I'm also a hedge fund manager, so I manage money for my clients at Altos Capital. And in fact, the strategy and indicator that I'm going to be sharing with you guys today are used in my hedge fund. So I use these not just in my personal trading account, but in my hedge fund, and credit these strategies and tools for never having a losing year in the fund. So we've had positive years every year since we launched the fund. I'm also the founder and creator of the Trade Trend Signal software, which I'll be talking to you guys about today as well, and showing you how we use this. So by the end of our session, you'll discover one trade setup that's never failed going back to the beginning of the stock market. So it's so reliable, it's worked 100% of the time on the major indices. So again, if you apply this setup to the S&P, the NASDAQ, the Russell, going back to the dawn of the stock market, it works out 100% of the time. It hasn't failed once, including in the recent Corona crash and the 2022 bear market. So it happens repeatedly with astounding predictability. And whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets, particularly because markets are becoming more erratic and more volatile. So you'll discover why volatility is one of the only leading indicators of market direction. How to identify when markets may be vulnerable to a sell-off. This alone can completely turn your trading around because, again, it removes that fear component. Not only that, it can help us profit on, in bear market conditions or during market crashes. I'll show you how to identify when the market is likely to go back up after one of these legs lower, or, a downtrend or even a bear market. How to determine exactly how far the market is likely to go up. This, again, alone is worth its weight in gold, because it's what I call the trader's dilemma. If you get into a successful trade, a successful directional trade, there's always that dilemma of how long do I hold on to it? When do I get out? And that's where the major psychological factor comes into play. I don't want to miss out on future potential profits. I don't want to experience a reversal, an adverse reversal that results in all of my open profits evaporating and maybe even turning into a loss. We're going to solve that problem as well. I'll show you guys how you can get your hands on a tool that will change your trading forever. And that's a bold statement, but one I make because these are, again, tools that I use in the markets that have allowed me to be successful and allowed me to run a hedge fund that has never had a losing year. So let's start out by imagining a slingshot. So as we pull a slingshot back, muscle energy is transferred to elastic energy in the bands of the slingshot. After the slingshot is released, the elastic energy is transferred to the stone as energy of motion. And this is what's referred to in physics as kinetic energy. Well, in markets, kinetic energy kind of plays out in a different form in the form of supply and demand, right? So demand being buying pressure. So when there's a market sell-off, it creates demand and buyers come in and buy at lower prices, okay? And then that results in the kinetic energy of a trend. Okay, and this is why I call it the slingshot. So once these bands become overstretched, it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. Now, let's talk about applying the slingshot effect to the markets. We're going to use a volatility study to do this. And if you're familiar with volatility, and specifically implied volatility, it's one of the few forward-looking predictive indicators in markets. So it's the way that markets forecast future risk, right? And there's a number of different tools that give us volatility information. We're going to be using the Bollinger Bands, okay? These volatility bands tell us when prices move too far from the mean or the average and is likely to reverse direction. We call this mean reversion. Now, the Bollinger Bands have been around a long time. It's an incredible indicator, when, caveat being when used correctly. Like any other indicator, you could give it to 100 different people and they're going to use it 100 different ways. We'll go over some of the more common ways it's used. But I'm going to show you a very unique way to use this indicator. And it's available on virtually any retail charting or broker platform. And it can help us, again, when used correctly, pinpoint turning points in a security with quite astounding accuracy. So let's just look at this chart in the middle of your screen. Okay, this is the Bollinger Bands are plotted here. This is what the slingshot looks like, okay? So all I want you to notice right now is price is coming down into the lower band and breaching that band. Well, what happens next? We get a leg lower, right? So we get a downtrend. Now, again, think back to that psychology curve. We have panic selling, right? People are taking losses on long positions. Eventually, that sell-off results in demand or buying pressure and drives price back up to where this all began. Okay, so again, we're going to dig into this more here momentarily. First, I want you to, if you're not familiar with the Bollinger Bands, I want you to have some basic level understanding of what they are and why this works. So I won't go into a lot of detail here, but I just want you to know that there are 3 bands, right? So you have a middle band and 2 outer bands. For the middle band, we take a simple moving average of the securities price. So that's all that center band is. Next, we take the standard deviation of the securities price. Now, standard deviation is simply a mathematical measurement of average variance. Okay, this is where volatility comes in. And that's because the standard deviation measures how spread out numbers are from an average value. Okay, and again, we won't go into the calculations of that, but just know that the outer bands are going to give us volatility information. And that's because standard deviation is a measure of volatility. So when the market becomes more volatile, we see the bands widen. And when the market's less volatile, the bands contract. Now, as far as settings, like most other indicators out there, you can input different settings. Most retail platforms will default to a 20-period SMA or simple moving average and a 2 standard deviation setting for the outer bands. Okay, so this measures how spread out those outer bands are from that center band. Okay, these are the settings that I use. I don't change them for time frame. I don't change them for asset class. I just use a 20 period SMA and a 2 standard deviation setting for the outer bands. Now let's look at some common ways that the Bollinger Bands are used. As I mentioned, like any other indicator, you give it to 100 traders and there's 100 different ways to use it. These are some of the more common ways. One is to buy at the bottom band and sell at the top band. Now, the problem with this approach is that price can hug the upper or lower band for extended periods of time. So in other words, if the asset's in a strong directional trend, you'll see it trail either the upper or lower band for extended periods. Only really in sideways ranging markets is this a viable approach. So it's very specific to market conditions. For that reason, I don't prefer that approach. Another common practice is band contraction and expansion. Now, this actually does give us good information, and we will be using it in the slingshot setup because it can be a good indicator of an impending big move in a security. But the problem is we don't know in which direction the move will occur. So it doesn't really give us directional information. For that reason, we don't use that approach by itself. Another common way is buying or selling at the middle band. So this is more of a mean reversion strategy. And it can work in strong trending markets, but it fails in sideways ranging markets. And most of us know that markets are not in strong trends most of the time. In fact, most of the time they are ranging. Okay, so for that reason, we don't use that approach. Now, the slingshot setup is a unique way to use the Bollinger Bands. And what we do is wait for the lower band to break. I'll explain what that means. Price will hug the lower band and ultimately rebound to where the breach initially occurred. Okay, this is the slingshot. Now, as we get into some chart examples, this will become more clear. But I want you to know that the slingshot occurs with astounding predictability. So the major market indices have returned to the initial volatility breakout with 100% accuracy. That includes the bear market of 2022, the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis, the 2000 dot-com bubble, even the recent Corona crash, every black swan event, market correction, major crash, bear market, you name it, this plays out, okay? And we're gonna be actually going over chart examples related to some of these specific events, and we'll be applying the slingshot. So let's start out by doing that. Okay, so I told you we come back to this daily chart of the S&P from the Corona crash. We've now got the Bollinger Bands plotted. So what I want you to notice on the left edge of the chart, so back in February of 2020, what do we notice regarding the Bollinger Bands? They're relatively narrow or close together. They're horizontal. Simultaneously, markets are hitting new all-time highs. This is what we call volatility contraction. So notice how the high-low range of the candles is relatively narrow compared to when we go into the actual crash where it widens significantly. Okay, this is volatility contraction. Now, here's where the slingshot begins. This is where the bands begin to get pulled back. And there's a couple key things to notice at this point in the chart. Okay, so around the third week of February, price rotates lower, so S&Ps are starting to sell off into the lower band. Notice how the candle breaches the lower 2 standard deviation band. Because remember, those outer bands are 2 standard deviations away from the center band. Okay, so we're getting a breach of the lower band. Now, the other critical thing that's happening at the same time is that the outer bands are diverging. So notice how earlier in February, they were relatively narrow, horizontal, and parallel. But when price breaches the lower band, they begin to widen and spread out, and the outer bands are pointing away from each other. This is our first clue that, number one, a slingshot is setting up, and markets are very, very likely to rotate lower. Okay, doesn't matter what the catalyst is. Okay, this is the price action tells us this, and the volatility, the transition from volatility contraction to volatility expansion tells us this. Then we get the sell-off. So S&P's down over 30% in just a matter of a few weeks. Now that creates buying opportunity. Again, going back to that psychology curve, what's occurring? Well, we have panic selling. People are fearful. They're probably taking heavy losses. In fact, we know that in hindsight. There was billions of dollars lost amongst retail traders in the COVID crash. Now, ultimately, again, that creates demand. Okay, so large institutional buyers come in, scoop up shares, and drive the price right back up to the initial volatility expansion level. Now think about the catalyst though for a second. Okay, we're in the infancy of this pandemic. There are a lot of unknowns. We don't have at this point in time any viable treatment options. We don't have vaccines. We have global economies shutting down, people working from home, quarantines. None of that had even close to being resolved, right? It was only going to get worse, and it did. However, markets came right back up. And of course, now we know they've far exceeded the levels from back in 2020. All right. But this is what the slingshot is. So when markets return back up to that initial price level where the slingshot initiated, the slingshot has now been released. The bands are back in resting position. This is where we would actually look at taking profits. Okay. And again, this is where other traders are going to what? They're going to be greedy, have fear of missing out, and be buying in at much higher levels than they could have back in mid-March. Okay, so this is the slingshot. Let's look at some other chart examples. This is one of Apple. As I mentioned, this can be applied to any asset. Okay, so this is a daily chart of Apple. What do we notice on the left half of the chart? Well, Apple's in a strong uptrend. It's trailing the upper 2 standard deviation band. Okay, the bands are parallel. Okay, see how they're moving in parallel. However, in the middle of the chart, Apple begins to rotate lower and breaches the lower 2 standard deviation band. What clue is that giving us? Well, this is the beginning of a slingshot setup, and very likely Apple is going to move lower simultaneously. So just the fact that the candlestick breached the lower band isn't quite enough. Simultaneously, the outer bands are diverging. While that candle is breaching the lower band. This is a confirmed slingshot. Okay, so notice how the outer bands are diverging when we get the lower band breach. So what we could, if we had an open profitable position in that prior uptrend, we could look at maybe taking profits, getting out of the trade. Maybe we were holding Apple for more of a medium to long-term outlook, and maybe we want to hedge the position, or maybe we want to short shares or implement a bearish option strategy, for instance. These are all viable options. But we get the sell-off in Apple. So Apple comes down into a key level of support right around 168. It attracts buyers who then drive the price of Apple right back up to the initial volatility expansion level. Now, in this case, Apple went on to make a significant additional upside move. This is actually an extension of the slingshot strategy. In the interest of time, we won't get into a lot of the nuances of it, but often when we exceed that initial volatility expansion level, the shares can go on to make a significant upside move from that level, as they did in this case. This again is the slingshot. Let's look at an example on the Qs, the NASDAQ 100 ETF. This is from back in 2018, 2019. What do we notice on the left edge of the chart? Outer bands are relatively narrow and horizontal. The Qs come down and breach the lower band. Simultaneously, the outer bands diverge. So we're transitioning from volatility contraction to volatility expansion. Sure enough, the Qs sell off, okay, from around 180 down to 143.50. That's a significant sell-off, but it creates buying demand, buying pressure, right? So there's demand. Buyers come in and drive price right back up to the initial volatility breakout level. All right, and again, remember, this is where other traders are probably starting to figure this out and buy into shares of the Qs. Does this work on intraday timeframes? Absolutely. So this is a 5-minute chart of AMD, Advanced Micro Devices. Okay, what do we notice on the left edge of the chart? Price is in a sideways ranging channel. Remember, I mentioned that approach of buying at the bottom band, selling at the top band. Well, that would have worked out fairly well here for about an hour or so until it didn't. Right? Here's the volatility expansion, the beginning of the slingshot, the sell-off that creates buying pressure or demand as the share price comes right back up to the initial level. So we've talked about how to identify when markets are likely to sell off, when they're vulnerable to a rotation lower. You're probably wondering, how do we identify the buy zone? Okay, if we're gonna, because we can trade this in both directions. We can, short the shares, incorporate a bearish option strategy, or maybe we don't want to short shares of a stock. Maybe we want to just buy when there's enough demand. So the trick is to identify when the band is overextended and ready to snap back. And there's a number of ways to do this. Back when I first began trading the slingshot, I would use things like candlestick patterns. So look for maybe a bullish reversal candlestick pattern, a key support level. We looked at in one of the charts previously, the asset rotates down into a support level. That level holds and begins to reverse. There's a number of ways to do this. So I used to do this manually, but I was incorporating a pretty significant amount of intuition or guesswork. Okay, so what I ended up doing was spending well over a decade and thousands of hours trying to determine when momentum is shifting and when a new trend is starting. And once I got this formula dialed in, I then had to configure it to work on all time frames and duplicate the success across all markets. So all asset classes, whether it's futures or Forex or equities and ETFs, in an adaptable algorithmic formula that can reliably predict market trends. Now, the key is I wanted to be able to do this with forward-looking forecast. Most indicators use lagging data, okay? I wanted a tool that could provide accurate buy and sell signals near the outer channels of the Bollinger Bands up to 3 candles in advance of the move, all right? And that means that if I'm trading off of a daily chart, I have up to 3 days of advance notice of a forecasted directional move. And when I formulated the right combination of momentum indicators and combined them with volatility studies and price action setups, I found I could accurately identify buy and sell signals at the outer bands. And this is what I've programmed into an indicator called trade trend. Okay, so trade trend gives me accurate buy and sell signals up to 3 candles in advance of a trend. So again, on a daily chart, that's up to 3 days of advance notice. On a 5-minute chart, I have up to 15 minutes of advance notice of a forecasted directional trend. And it uses a proprietary blend of momentum studies built into an algorithm, and it reads the market in real time. So the idea is to give us a forecast, a forward-looking signal, not a lagging signal. Once a signal triggers, then we're left with how do we manage this trade. So I also built into the algorithm a trailing stop component that actually reads markets in real time, not using a single bit of lagging data. So it's actually reading the market in real time, looking at the volatility, the trend strength, the momentum, and telling me where to trail my stop before the trend reverses against me, okay? And this can help us predict short-term and long-term trends with astounding accuracy. As I mentioned, any asset class, any market, equities, ETFs, futures, Forex. We also have a scanner built into it. So you can run scans and actually find these opportunities at the click of a mouse. You can do this on any time frame. A lot of our members at Altos, including myself, use this tool to supercharge option strategies, especially directional option strategies. If you guys trade options, you know they're a very time critical asset. If you don't get your delta, gamma, theta, vega all right, you're not exactly correct on your timing, it's very difficult to make money with a directional options trade. Trade trend helps us do that. It also does not repaint. And what that means is when you get a forecasted signal, it is there on the chart. It's set in stone. A lot of indicators out there will repaint, and that's largely the reason when you are exposed to an indicator and you look at it back on a chart, it can look incredible. And you think to yourself, wow, if I just placed a trade where all these signals came in, I'd be a multimillionaire. But then when you go to use it in real time, it doesn't play out that way. Well, that's often due to the fact that the indicator repaints, okay, as market conditions change. Trade trend does not do that, and it has built-in protection to avoid whipsaws. It helps us capture most of the trend before it reverses. It's designed to limit losses and let profits run. It can be used with any other indicator or system for added confirmation. So like today on our session, I'm gonna show you how we use trade trend with the slingshot setup, but it can be applied to other strategies, other methodologies, and even used alongside other indicators for added confirmation and help us trade without guesswork. That's the key. With trade trend, there's no guesswork involved. You know exactly where to get in because it gives you the forecasted entry price. So it'll print right on your screen what price to enter, whether it's a bullish or bearish trade. It'll print the trailing stop. It tells you exactly how to manage it. Now, I mentioned I would give you a little trick to help eliminate losing trades by simply not getting into them to begin with. And this is actually built into the trade trend algorithm. So if you look at broker data, like retail broker platforms like Schwab and E-Trade and Interactive Brokers, the vast majority of order types are either market or limit orders. And that's fine. There's nothing against a market or a limit order, but that is what most people use to get into a directional trade. I think that market and limit orders have are more appropriate for other circumstances. If I'm going to take a directional trade, I use a buy stop or sell stop order. A buy stop order would be used to enter a long trade. Okay, so that simply means that we would enter the asset on a long trade or a bullish trade at a price that's higher than the current market price. Conversely, on a bearish trade, we would use a sell stop order and only enter if price comes down into that level. So that's how you use a buy stop or sell stop order. And it can help us filter out false signals and improve consistency and increase profitability. Because if you use a market or a limit order, right, and you're wrong, you're in that trade. And oftentimes you could get into a bad trade right off the bat that never even, doesn't even make it too far in a profitable territory, if at all. With a buy stop or sell stop order, most of the time you're going to get into a successful trade right off the bat, because in order for you to even get in that trade, there has to be follow through on the directional trend. Okay, and that's where the momentum of the slingshot comes in. Now, do I use this in actual practice? Do I use trade trend? Do I use the slingshot setup in my real money personal account? Absolutely, I do. So I mentioned that I would share some real money, real world examples to back up what I'm revealing on our session today. This is from back in the Corona crash. So back in 2020, I traded the slingshot both on the way down as markets were selling off and on the rebound, using, again, the slingshot setup and the trade trend indicator. And at that period of time, I was trading the futures markets. Okay, I knew that obviously in the midst of the COVID pandemic, I knew there was obviously a major catalyst at play here with a lot of uncertainty. So I was relatively cautious. I was putting on relatively small positions, 1, 2, 3, 4 contracts, and I was predominantly in cash. I wasn't trading a whole lot of my account on the way down. So this was in February. Okay, so obviously that sell-off started, I think, around the third week of February 22nd or so. Okay, so only about a week into trading the downside of the slingshot, I booked over $13,000 in profit. Now, I then got a buy signal from Trade Trend in March, and I knew with a high degree of reliability this is going to be the rebound of the slingshot. So I was still trading relatively small position sizes, just a few contracts, but I started putting on more positions. The slingshot was popping up all over the place. There was an abundance of opportunities, so I began to trade them. By the end of March of 2020, booked over $27,000 in profit. So while all this panic selling was taking place, we're in the infancy of this major pandemic, and people are taking heavy losses. Between February and March, in fact, I began this process again around the third week of February, so just a little over a month, booked over $40,500 in profits, just using the slingshot and the trade trend indicator. So real world, real money results. Now this can work in any market, any time frame, and any size account. Virtually every strategy or methodology I design, every indicator that I develop is designed to be practical in nature and be used in any time frame, any asset. Okay, so it doesn't matter what the asset is, and it provides us predictive buy and sell signals before the move occurs, up to 3 candles in advance. So I don't do much intraday trading. I mostly trade off of daily and higher time frame charts. But when I'm trading off of a daily chart, I have up to 3 days of advance notice. The buy and sell signals are valid for up to 3 days, and they give us a future forecasted price. Trade Trend has forecasted every market crash and rebound in the history of the market with 100% accuracy. So I'm going to tell you how you can get this indicator in just a minute. And once you do, you can go back and look at the indicator on your chart as far back as you want to go. Pull up a chart of the S&P, pull up a chart of the NASDAQ, pull up a chart of the Russell. Every black swan event, market crash, and again, we'll look at a few of them here in just a second. You name it, you'll see the Trade Trend sell forecast. Okay, so let's look at some of those. This is back from the flash crash in August of 2015, daily chart of the S&P 500 index. In May, June, July, and into early August, S&Ps were flat. They were moving sideways. They weren't doing a whole lot. Okay, then we have this major flash crash ensue around the third week of August. Trade Trend flashed the sell signal on August 19th of 2015. Okay, S&Ps hadn't even sold off yet. They're still in this trading range. Very next day, boom, we get a major sell-off in the S&Ps, in the broader markets. We then get a double bottom. Early October rolls around, Trade Trend flashes a buy signal. There's the rebound. Hopefully you guys can spot the slingshot here as well now. This is going back further to the 2008 mortgage crisis. Okay, once again, markets are trading around all-time highs, right? We've just had this big housing bubble. A very few number of people saw what was coming, okay, with all the subprime lending. The second half of 08, markets lost more than half their value. May 21st, okay, markets haven't even nearly begun to sell off yet. In fact, they're in an uptrend in March, April, and May. But May 21st, Trade Trend flashed the sell signal. So that's the red arrow that you see. There's the sell-off. Notice how it gave us, in this case, about 5 days of advance notice before markets really started to rotate lower. Then late November, we get a buy signal from Trade Trend, and markets, of course, rebounded. The 2000.com bubble, going back over 2 decades. Once again, we're in this major economic bubble. Markets are hitting new all-time highs. Hopefully, again, you can spot the slingshot there. In this case, the slingshot actually came in a little bit earlier than the Trade Trend sell signal, but there's the added confirmation, the sell signal, and boom, markets experience a major crash. Late September, we get a buy signal from Trade Trend, and we get the market rebound. So guys, virtually every system will produce winning trades if you can stick with it long enough, right? The problem is they don't keep you out of the market when conditions are not favorable, and you end up giving back your profits on the losing trades. This is what I designed Trade Trend and my slingshot indicator to help us avoid. Okay, this is predominantly what these tools are designed to help us avoid. Here's, again, real world, real money proof. These are just from using the Trade Trend indicator without the slingshot setup. The Trade Trend indicator can be used alone. Okay, so here's some actual real world, real money trades from my personal Thinkorswim account using the Trade Trend indicator in the futures market. So profiting over $8,000 in a day, over $6,500 in a day, over $6,000 in a day, over $5,400 in a day, with as much as $27,535 in open profit. Now, there are going to be losing trades like any other indicator or strategy out there. It would be wonderful if they all, they produced 100% winning trades, but that's not reality. There's going to be losers. What I want you to notice here, if you look at my losing trades, okay, full disclosure here, I gave you my full screenshot of all of my positions. Okay, I have losing trades in there, but Trade Trend allows me to keep these relatively small and contained relative to my successful trades. If you look at the P&L of my successful trades, it far outpaces my losing trades. That's what we call positive expectancy in the trading world. Okay, here's an example of where I use Trade Trend alongside the slingshot. Just trading 3 futures contracts. I did over 26,600 in a single day with over $115,000 in open profit. So now I'm going to make a promise to you guys. I want to help you have days just like these, and I'm going to give you access to the exact indicator I've used to achieve results like I've shared with you guys today. This is a one-time opportunity to join me to discover how I make consistent income in the markets day after day, week after week. I don't hold anything back. So every one of my special techniques and indicators that make profits like this possible, I give to you. I don't hold anything back. So you get the full licensed indicator, the full functionality of the indicator. You get obviously my slingshot setup that I've taught you guys today, but you get a lot more. So not only are you going to get an entire year of trade trend for stocks, ETFs, futures, Forex, whatever, cryptocurrencies, whatever you guys like to trade, you get exact entry and exit signals. You get live interactive trade sessions. So we got to spend about an hour together today. I host one of the educational events every Tuesday night. Okay. Today we went over my slingshot strategy. Every Tuesday at 7 p.m. Eastern, we go over different strategies and we use the trade trend indicator in live markets. If you're not able to attend one of these sessions, you also get members area access for the replays and recorded training sessions. You get full support and personal coaching from me. So I'm on each of these weekly sessions. I'm there in live attendance, and I'm there to answer questions and help you guys be successful. I also teach trade adjustments to fix losing options trades. So if you are an options trader, I'm going to tell you in just a second how you can get all of my training on trade adjustments for option trade, bad options trades. I go over some of the tickers that I'm trading currently and some of the strategies that I'm using to do that alongside the trade trend indicator. This is all designed to help you cut the learning curve and trade like a pro, starting as early as tomorrow when markets open back up. Now, there's even more to the package. So I'm going to go through everything that we have put together exclusively for this event. And that, again, includes an entire year of trade trend. You get it on actually a selection of platforms. So I know this says Metastock. That's one of the platforms. In just a moment, I'll go over the other platforms that you can select as well. But a year of our trade trend indicator normally retails for $1,499. You also get the weekly live sessions hosted by me. We normally retail those for $550, but you're going to get those as part of the package as well. You get personal coaching from me. My personal coaching normally starts at $19.97 and goes up from there. But again, I'm going to be with you every single week. I'm there to coach you. I'm there to help you be successful. You'll get access to our exclusive invitation-only Facebook group. We have somewhere around 900 members who use our trade trend indicator and our other strategies and methodologies. Membership to that group normally retails for $199, but you're going to get that as part of the package as well. You're going to get my special training on adjusting losing options trades. We'll walk you through some of the more popular option strategies and what to do when things go wrong and how to transition losing options trades, either mitigate the loss or even transition them into net profitable outcomes. Normally we retail that course for $900. You get online access to it. You can watch it at your leisure. And ultimately learn to trade equities, ETFs, futures, Forex, options, whatever market you like to trade with consistency. There's even more. So you're going to get two bonuses. Bonus number one is our professional trading series online course. We normally retail this for $595. It's over 10 hours of content. And as I mentioned, today we got to go through my slingshot strategy. I have a whole toolbox of other strategies and tools and methodologies that we teach our members at Altos, all built into our professional trading series online course. You're going to get full access to that as well. As bonus number two, how to create risk-free trades. This is my latest ebook. That is a great supplement to this package. It's a money management strategy book that goes into different tactics for mitigating risk and even in some cases eliminating it from your trades. So the total retail value on our package is over $5,100. Today only we're taking 90% off. So you can get this entire package for only $497. We're limiting this to 25 seats for purposes of good customer service. As much as I'd like to have everybody get into this package and buy it from us, we would not be able to give you guys good customer service and do that. So that's the reason that we limit it. It doesn't mean that you can't get any of these individual items once the 25 seats are gone, but it will go back to the retail price. So if you want the 90% discount, you can go to altostrading.com/slingshot to claim one of the 25 seats. Now, I'm going to open it up to questions here in just a minute, so get your questions ready. One of the first common questions we get is, well, what platforms is the indicator available on? Well, as I mentioned, it is available on Metastock. It's also available on TradingView, NinjaTrader, Thinkorswim, TradeStation, and also Wealth Charts. So you get it on any of those platforms. Once you claim one of the memberships, you're going to get to select which platform you want the indicator on, as well as all the bonuses that you're going to get in the package. Again, you get the professional trading series online course. You get my latest ebook, how to create risk-free trades. And I have a guarantee. So if you don't make at least your membership fee back in the first 90 days of joining us at Altos, I will give you an extra year of trade trend on the house. That's a $1,499 value. I want you guys to be successful. I want you to have ample time to do that, to reach your goals. And I realize that everyone has a different learning style and a different pace. So even if you don't place a single trade in the next 90 days, and you feel that you need more time, just shoot us an email, give us a call, and I'm going to give you our email and toll-free number here momentarily. And we will give you an extra year of the indicator on the house. Okay, again, the link is altostrading.com/slingshot. Now I'm going to go ahead and open it up to questions. If I don't get to a question, or if you're like me, you think of the question after we sign off and you're kicking yourself, you can email us support@altostrading.com anytime that's convenient for you, or give us a call toll-free 800-895-9348 anytime between the hours of 8 a.m. and 5 p.m. Eastern time. So I'm going to go ahead and open it up to questions. And Sherry, I haven't been monitoring the chat, so if there are any questions that you want to relay to me, or if there are
Yeah,
any,
I got you. I did post the link in the chat for everyone, and
Thanks,
we
Sherry.
got one. Can you hear me okay?
I can hear you.
Okay. I'm so trigger shy right now because of the way this day has just been really wild.
Technical problem.
IQ wanted to know, IQ wanted to know, does it give false signals? And that was at 4:42. So that was about 20 minutes, well, 10, 15 minutes ago.
Yeah, good
Wondering.
question. Yeah, so the beauty of the indicator is it gives you two signals on your chart. So as we looked at on those charts, it gives you a buy or a sell arrow. So it'll give you a green buy or arrow or a red sell arrow. When it gives you that arrow, okay, that's the forecasted trend direction. It's going to also print on your screen a suggested entry price. Now, if that price is not reached within the next 3 candles, so again, if you're trading off a daily chart, that you have 3 days. If you're trading off a 5-minute chart, you've got 15 minutes. Let's just stick with a 5-minute chart. If within the next 15 minutes, the price doesn't come into that suggested entry level that, again, the indicator will print on the chart for you, then there's no confirmed trade. If it does, it's going to print a little dot on that candlestick showing that this is a confirmed triggered signal. So not every signal will trigger. So I guess if you want to call that a false signal, yeah, there are going to be arrows that do not follow through and don't result in a triggered signal. So good, yeah, good question.
Oh, cool. Eric wants to know, Jeff, what kind of time frames in future markets?
Yeah, again, it's designed to be used on any time frame. That's kind of more of a personal decision. So it really depends on what time frame you want to trade off of. What I tell people is the lower the time frame, the more signals you're going to get. So if you're trading off a 1-minute chart, you're of course going to get many more signals than you would if you were trading off of a daily chart. Personally, I do a little bit of intraday futures trading, and every time I do, I use the trade trend indicator. And I typically trade off of a 5-minute chart, and I find that it works fantastic on a 5-minute chart in the futures markets that I trade, the ES, the NQ, the RTY, CL, oil, GC gold, so all of those. But yeah, that's a personal decision. So it kind of depends on what you want to do. But I predominantly trade off of daily charts.
Yeah. Okay. Adrian wants to know, is it possible to see the indicator in action before we buy?
Let me pull up a chart here real quick. Let's see here. Yeah, give me just a minute to pull up. I'm going to pull up Thinkorswim. I just got to open up my account here real quick, and I can show it to you on a chart. So if there are any questions while I'm doing this, let me know.
So there's one that says, on the Corona crash slide, several candles broke the BB. How do you choose to wait on the first several candles that broke the line before buying?
So yeah, so when it first breaks that lower band, that's actually where you would, that would create a bearish setup. So that's actually where you would sell. And the confirmation you need there is when that very first breach occurs. So the first candle that breaks that lower band, you need to simultaneously see the outer bands diverge or point away from each other. So that would be the indicator to, you know, get out of long positions or hedge a long position or short that asset. The buying part of it is where I use trade trend. So when you get a developed slingshot setup, so the sell-off has already occurred, and you are going to buy or go long, I wait for the trade trend buy signal in that case.
Okay, cool.
And this
And
the chart's just coming up here, so in just a minute.
okay,
So if there are
cool.
any others, I can
Now,
answer some other questions.
Hector wants to know, is this a lifetime offer?
So the package is, so everything in the package is for a year. Is for a lifetime. The indicator is an annual subscription. So everything that you get in the package is yours to keep. Let me just move this out of the way here, get my chart up. The indicator you get at the 90% discount for a year. You're not locked into a contract. You are not in any way obligated, but you are grandfathered into that 90% discount. So if you want to continue
Ooh,
beyond a year, you still get that 90% discount.
nice.
Yeah.
All
Let me just
right.
clean this chart up here real quick, get these moving averages off, and I can show it to you.
Okay, so this is an answer to Adrian asking about if it's possible to see the indicator in action before we buy.
Yeah. So I'll just pull up a chart of the SPX. So this is trade trend is on here. Now I'm just zoomed out looking at 2 years of daily price action of the S&P. You can see the accuracy. So the arrows are the buys and sells. Okay. So notice at these major turning points, you're getting buys and sells. Okay. Now, not every one of these will trigger. If you see the dot, like let's zoom in on this signal down here. All right. So there's the arrow. This is probably really hard to see, but there's a little green dot down here. So that's our confirmed entry. These are our trailing stops. So notice how as this forecasted uptrend occurs, the algorithm looks at the trailing stop level. And notice how as this trend is transitioning into sideways price action, the algorithm tightens up the stop. And this one did go on to make an additional move. In fact, we got another nice buy signal after it got out of the sideways channel. But notice how it could have kept us out if this had reversed. Now, as I mentioned, not every signal triggers. So here are actually 2 sell signals that would have just kept us out of the market. Here was a sell signal with no trigger, so there's no red dot. Price would have had to come down below this candle to trigger this sell signal. Same thing with this one. Price would have had to come down below this candle to signal the sell signal. The algorithm was picking up that the trend momentum was starting to lose steam. Sure enough, it did. But notice how it did it before that actually happens. The strong uptrend was still intact. So the arrows told us that that was likely going to transition, but no triggered signal. Same thing here. There was a buy signal. We did end up getting follow through, but not until about a week or so later. No trigger. So the entry would have been above here. In fact, there's an open buy signal that just triggered. I'll show you here in just a second. Here's the buy signal. It was good for 1, 2, 3 candles or days after, but no follow through to the entry. So no triggered signal. But remember, it doesn't repaint. All the signals are there. So for an order there to be a triggered signal, you're going to have to see the dot afterwards, obviously. Here is the most recent triggered signal on the daily chart of the SPX. There was the buy. It came in June 4th, 2 days ago. Okay, it gave us a suggested entry on our chart of 5303, 42. Okay, so that's just going to be just above the high of this candle. Notice on the next trading day, June 5th, okay, so the signal came in on the 4th. That was the forecast. On the 5th, we get the S&P coming up into the entry level. Again, they're printed on the chart there, and we're off to the races. So here's an actually open signal on the SPX, a buy signal that is in profitable territory. But again, I can zoom out here and you can see the incredible accuracy of these triggered signals. Look at these major legs lower. Here was a sell signal at the top of this move. This one triggered 2 days later. There it is. Okay, there's the little rebound. There's the buy signal before the rebound. There's the trigger. Then the downtrend resumes. There's the sell signal. There's the trigger. Okay, and I can pull up any chart. I'll pull up a chart of the pound yen. Okay, again, this works on Forex as well. Okay, look at as the pound yen is oscillating within these trends, we're getting accurate buy and sell signals along the way, and certainly the ones that trigger. In fact, there's There was just a really nice buy signal on the pound yen back on May 13th, triggered the next day, beautiful up move. Look at the trailing stop, protected us. This is where you would have gotten out before the pound yen reversed. There's the sell signal, gave us 3 days of advance notice. There's the triggered candle, see the red dot, came down into the entry price that was 198.60. Okay, and this one is off to the races. It's pulled back a little bit, but it's still open. Okay, the trailing stop is managing the position. We can simply enter that level with our broker to protect open profits and control risk. So again, you can use this on any asset class.
Nice. Somebody's asking, IQ is asking, can I use the indicator for both TOS and TradeStation since I have both?
Yeah, so I would suggest once you get the package, select. It's only going to give you one option. So select the platform that you want, and then give us a call. Again, here's our toll-free number, and talk to one of our representatives. They can help you get set up on a second platform as well, because our system only allows you to select one. What? Sorry, Sherry.
Is there an extra charge for a second platform?
We'll comp you the second platform. So when you call in, just mention that you were on the Traders Exclusive webinar, and that you have the membership, so you've joined. They'll look you up, and that we've agreed to comp you the second platform, so you can.
IQ, there you go. And then he said, and maybe I don't know, is this similar to the TTM squeeze indicator?
I'm not familiar with the TTM squeeze indicator. I've heard of the name, but I've never used it. Don't know what it is. So I would say, yeah, definitely not.
Does the dot appear after the close?
No, so the arrow will appear after the close of the candle. So the buy or sell arrow is confirmed after the candle closes. The dot will appear during market hours. Yeah, so what you want to know, like, let's say you're trading off of a daily chart, because it'll be more applicable if you're trading off a daily chart. Intraday, of course, it's all going to be while market's open. If you're trading off a daily chart, you get a buy candle, okay, at the end of, let's say today, let's say a buy signal came in today. Markets are closed, so it's a confirmed signal. You go ahead and enter the buy stop order with your broker. Again, the indicator will print that price for you on your chart. You enter buy stop at X price, and leave that order open for the next 3 candles, so off a daily chart for the next 3 days. So you can use what's called a GTC, or good till cancel order. You enter that order. That's all you have to do, and just wait to see if that forecasted trend triggers, if it comes up into that entry price. And if it does, so like let's say it comes in the next day, that'll happen when the market's open, of course. You can't trigger a future price when markets are closed. So if that signal gets triggered, the dot will appear during market hours.
Awesome. Okay, so we've got, are there audible alerts when the dot appears?
Yeah, so that's more platform specific. So it kind of depends on which platform, and if the platform has that functionality. If it does, then yeah, we do. So like I believe like on TradingView, you can set up audible alerts. You might be able to on Thinkers. I don't use them personally, but I know some of our members do. But I know for sure, like on TradingView, they do. And so if the platform allows it, then yeah, the indicator will also allow it.
All right, it looks like we've got one more. Guys, we've got to be respectful of Jeff's time. It's already a little after 5. Adrian would like to know, did you have a market scanner to take all these trades in the different futures instruments that you showed in the screenshots? Or was that your platform?
Yep, absolutely. So there is a scanner. Again, that depends on the platform that you select, but what I was showing was on Thinkorswim. So if your platform has scanning functionality, it will come with a scanner as well. So which is virtually every platform. I think TradingView is the only one that doesn't have like a real actual scanner. You can still scan for signals, but they do it a little bit differently. But let's just say you select Thinkorswim as your platform. You will also get the scanning files. So you can run a scan in a specific market, which is what I did back then. So scan the futures market. It will pull up in your scan all of the pending buy and sell signals. So yeah, you get all of that as well, along with the actual indicator that shows up on your chart.
Awesome. 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 All right. Now we've got $5,000 worth of stuff for 500 bucks. You guys need to go check this out. The link is in the chat. And Adrian says, thank you very much, Jeff.
Thank you.
And I say, thank you very much, Jeff.
Thanks, Sherry.
Thanks
It's
for
always a
joining
pleasure.
us. I know. I really do. I love it when you can come along. I love how, I mean, every single person that speaks at a Traders Exclusive event, so genuine and so down to earth and so available and helping people improve their trading. It just makes, I was going to say, it warms my heart.
Well, same here. It's a pleasure. I'm so glad you had me on. Look forward to the next one.
All right. Well, then there you have it, guys. I'm going to do a little bit of housekeeping. Jeff, I hope you have a good evening, and I hope to see you in the future.
You as well, and welcome to all the new members. Looking forward to working with all of you. Take care.
Many thanks to our sponsors for the June live trader showcase, Market Taker Mentoring, TechniTrader, and Money Mentor. Please go check them out at markettaker.com, technitrader.com, and moneymentor.com. Thank you again.